The U.S. Senate and House of Representatives wrangle to work out differences in their respective tax reform bills. Will they get it done in time for President Trump to sign it into law by Christmas Eve? Will the Friday jobs report boost stocks as we head into Christmas? And the U.S. markets continue looking strong on the relative rotation graph, but is the tech sector in trouble? Caution! What's in your portfolio? Here's what's moving the markets and your money. I'm Charles Brown. It's Wednesday, December 6th, and this is CB3 on 3. Three on 3 covers current social and political news and fundamentals and technical analysis influences on market behavior and your money. Together, these influences determine the movements in all the portfolios we manage. Here's what we're seeing this week. The U.S. House and Senate will be working overtime until the Christmas break as they resolve the differences between the tax reform bills in the two different legislative chambers. In play are resolving these differences of the number of individual tax brackets, corporate tax rates, state and local tax deductions, the mortgage rate deduction, and the biggie, the medical expense deduction. Now, the medical expense deduction is perhaps the most controversial of all the tax deduction eliminations that are in play. Certainly the one that has generated the most social media commentary to me from our viewers. Here's my take on the political implications for our investments. The Senate version of the bill reduces the medical expenses deduction limit to 7.5% versus 10% of a family's gross medical expense. It is my belief that no more than 4% of the U.S. population even utilizes this deduction. While this will certainly affect some Americans, the lowering of those Americans' overall tax liability should mostly be offset by the reduction of the medical expense deduction. That's my opinion, and I must stress that CB3 on 3 is an economics and stock market commentary and not a political commentary. Bottom line, the Tax Relief Act and the Jobs Act of 2017 should indeed stimulate the U.S. economy and benefit the vast majority of Americans on their tax returns and in their investment accounts. In news and fundamentals events, the fundamental data we are most anticipating is this Friday's non-farm payrolls report. I'm expecting 200,000 new jobs for the month of November. The Department of Labor's monthly payroll report, usually published the first Friday of every month, shows a comprehensive picture of jobs growth in America. As I mentioned last week, unemployment is at a 17-year low, which is contributing to the Consumer Confidence Index resting at its highest level in 17 years. Here's my take on the fundamentals for our investments. Unemployment is indeed at a 17-year low. Shrinking unemployment with a healthy economy continuing to add jobs is essential to our portfolios growing as we head into 2018, likely with a new IRS tax code. Portfolio growth discussion is why CB3 on 3 exists. Stocks generally increase in value as their profits increase, either looking backward to previous quarters or looking forward to projected earnings. Maintaining a growing economy is essential to investment success in 2018. That's why I'm following so closely the Tax Reform Act developments. More on that next week. In technical analysis, the U.S. markets versus the ex-world markets relative rotation graph, or RRG, in the Dow, the S&P, and the Russell, you can see that they are continuing to strengthen here in green, and they're looking really good. Now that said, notice that the NASDAQ 100, the index representing the largest technology stocks, has now weakened, shown by its arrow pointing downward into the weakening quadrant and away from the leading quadrant. Now that's caught my attention. When I look at the tech sector among the 11 sectors, I'm a little troubled by tech's weakness heading into the traditionally strong month of December. Here's my take on the technical analysis for our investments. The technology sector is the largest of the 11 S&P 500 sectors at roughly 20% of the entire U.S. economy. We at CB3 and our clients have considerable investments in technology. If this pattern is a rotation into cash or to other sectors, both of which could be considered defensive, we will certainly evaluate whether it's time for our clients to lighten their technology holdings. However, as of this moment, we remain bullish on technology. Stay tuned next week. And that's CB3 on 3 for Wednesday, December 6th. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, We don't just manage your assets, we become one of them.